19 June, Monday, beer channel. Okay, let's go for weekly daily chart. Okay, so last Friday we see breakout candle in daily bar. Okay, so and this is the total high of the bank nifty, 52-week high of the bank nifty. Okay, so today we open above last week's high and closed on bear bar. Okay, so we again closed in between uh, last week range. Okay, this last week is breakout bull bar. So overall week considered as a bull week. Now on Monday, first day, we closed between uh, last week range. Okay, so let's go for 1 hour chart. Okay, so uh, as uh, we see, there is expanding triangle pattern is formed here. Okay, so every breakout is faded by opposite player. So here bulls breakout which is faded by sellers. So this is measured move. Now this again breakout below this level faded by buyers. This is also measured move. Okay, today again gap up and this move faded by sellers. Okay, so let's go for end of day review. Okay, so bear channel throughout day, uh, price not able to sustain above moving average, so it is sign that selling channel will there are many trending bars which are closed on its low and indicates that bear channel is going on. So this channel, this bar. So closed below this is good approach for always in position. So always in position from starting of these three candles is short. So this is the EMA breakout candle which confirm that, and selling below it, put your SL below above breakout bar or high of the day. Okay, so there are good swing setups. Majorly good swing setups are of short. So this is the micro channel of short. Here we see bull pullback which have two legs. Again short below moving average. This is also seller's second leg. So good swing setup. In last 2 hours, 1.5 hours, we see bull channel. Okay, so bull setup is there after exhausted move. So this is also good buy setup. Okay, so there are in this first portion buyers not able to make money in, they have a space for two leg which shown here, which is not uh, too much strengthened. So this is faded by sellers. Now this is the exhausted move. Buyers have traded and got space for 2 lakhs. Okay, let's go for uh, tick by tick analysis. Okay, let's. Okay, so first bar doji candle, sort of doji candle which have no upside tick or wick. So body is only 10%, so it's considered as a sideways market in first candle. Okay, so I am also discussing that buying or selling on first candle, how we can manage it. Okay, so yesterday, Friday, we seen that buying first close is good approach. Now this is the decent bar which have 50, at least 50% of body and 50% wick. Look here, on 14 June there is also profit of after first candle close selling. Okay, so this is the exhausted move in first candle. So opening reversal move here, first close, take profit here, take profit here. This is a good opportunity in first hour. Okay, why to consider it? Because in first hour there are good swing trade chances. Okay, so let's consider these 3 days. Let's consider a probability of these 3 days. So after first candle, if we say closing and buying, so this is the one uh, win situation, this is the losing situation, win situation, and before that we go win situation, losing situation. So there are if you understand this, this is not tradable idea to sell below here. Wait for it some setup to go on. So this is the wage setup, buying setup below this. So if you understand well, so this avoidable. So if you um, there are many chances that you always in profit and daily profit. Okay, if you manage well, so 90% of in first hour or 2 hour move, you participate and you get profit 90% of it. So high chances are that. Okay, so this is the 20% body. So if you not sold or buy on this candle, wait to confirm. So okay, so as per seen expanding triangle move, okay, every breakout is faded by opponent participant. So here is the consecutive third push, first, second, and third push. So there are chances that this move is faded, considered as a faded. Another approach is that this is the first leg, pull back to first leg, and second leg to second leg to buying channel. Okay, so this is also approach, and it also shows selling setup. Okay, if you are getting this, then second candle, which is also, if you fresh seeing this day as a Monday, so second candle closing on its low, it's good sell setup. So closing below it, third candle which have 50% body. So if you traded here, move your SL here, or even this candle, second candle, third candle, also chances that close on sell on close. What is the approach here to be traded for? Okay, so first approach is that we test close of yesterday, okay, which is somewhere here, and we also test moving average of this, and also upon that, this if this bear channel move forward, so we even below yesterday range or somewhere here we can see that. Okay, so this is the approach for to trade selling side here. Okay, so selling on third, even selling on fourth, this is the four consecutive bar. Selling on fourth is also good uh, approach. Why? Because if you trade here, let's say if you consider it, if it pull back little bit, so you just scale in by taking SL here. Okay, so if you trading third candle and fourth candle, so you are on minimum position. You have to trade minimum position of your total position. So if price pull back in case, so you can uh, manage that position and even scaling. Okay, now fifth candle, which is also on closing on its low. So 1, 2, 3, 4, 5 consecutive 5 candles, bear bars. Now sixth candle, which is the bull bar, it is not a reversal candle. Okay, so uh, in day like this, okay, or this, so there is one trade to be approached is to uh, reversal bar. Okay, if you consider it third candle, which is also good reversal bar, sixth candle. So opening reversal trade are made here. This is also opening reversal trade. But if you look, these candles are uh, closing on its high and have equivalent bull bar. Okay. So if you see this is not sustainable bull bar and even not closing around its high. So what idea to be approached here? Not taking buy on its close or even not exiting. These players are not exiting here. What they will do is they will wait to price go above this high. Okay, and buyers also wait to see that if price go above this, they trade for opening reversal and further we chase for high of the day. So sixth candle, which is not reversal candle, consider. Seventh candle, bull bar, which not able to break above. uh, it is a follow through candle but not above closing above uh, last candle, last bar's high. Okay, so even buying on above this is also not good decision. So they are buying for scalping. They hope that if you get third consecutive bar. Okay, so one idea to be uh, consider in mind is that if channel is going on, any channel, okay, buying or selling, so there is less chances that uh, opposite opposite player will get three or more than three consecutive candle. Even two is less chances. Here we see two consecutive bull bars. In this buying channel, there is no any single red bull bar. Here we see that three consecutive bear bar, which shows that two-sided trading is going on. Okay. Here you see there is only one consecutive bull bars. So sellers are dominant in this channel. Okay. So if you see two or three consecutive bull bar against you, you can exit and consider it as a pullback. Okay, so here all after seeing this move, one idea is to be taken is that always in position is short position. Okay, what I have um, I have idea that in 60 to 70% of this type of bear structure, opening bear structure, there is chances that at the end of day we are uh, closing at the midpoint or high above the closing on high. Means that if sellers are getting prices on opening, so there are chances that we end up in up move in second half. Okay, so if you that idea in mind, so every bar is uh, reversal bar. Okay, but if you check the strength of that bar, so it is not sustainable. Okay, sixth, okay, seventh bar is bull bar. Eighth bar, uh, sell on close can't be considered if you're not traded here. Move your SL to here if you are in position. move your SL to here, buying SL. Ninth candle, buyers not getting its high, so sellers will took control, or sellers are in always in short. 10th candle, which is breakout to this 4 candle uh, price action. Also, it breakouts EMA. After closing on its high, there is approach to be traded that we chase for low or even further move. This is the selling channel, micro channel. So buyers are not in profit. Buyers even not getting more than 2 decent candle pull bar. Okay. So after trading, selling on 10th close, or wait to retest here. So it retested EMA 10th 11th candle, which is a tried to bull bar but not able to sustain. 12th candle, which is not trading above its high or previous candle, so it retesting. So sellers which are in position, they moved SL to here. If fresh sellers are there, they even scaling at this position, closing of bull bar. Okay, it is also mathematically uh, right. So closing bull bar, short position created, move your SL to here. Okay, so always in position is short. 13th bear bar, which is closing on its high. 14th candle, it got followed through from 13th candle. So 2 consecutive selling. So micro channel is sustaining. 14th close on it, sell on close. 15th candle, uh, also always in short candle we can consider it. Okay. 16 candle, which is also good follow through in this micro channel of 4 consecutive selling bars, bear bar. Okay, now this is the 17th candle. So whoever are in position and in profit position, they can exit by looking closing on its high. Okay, 17th candle. 18 candle, which is not good follow through for these buyers whoever bought it for scalping. So if sellers are exited on this candle, so now they can enter below it or after any bear bar. Okay, so this is the right idea to trade it. If you consider it that this will going to faded by buyers, so this is the best idea to trade here. And if you just put SL here and trail it, so it is also a good approach. 19th bar, which is closing on its low, so again re-enter any of sellers who is exited here. So 20th candle, which is inside bar, always in position is short for that. 20 candle, 21 candle, 22 candle, these three are decent follow through consecutive bear bar. Okay, now important point in this bear channel up to 22 point is that if you anyway missed here or even missed here, look, if you sold on 16th close, put your SL here, so there is the good chance that you get at least 1:1. Okay, those who are sold here, after seeing this breakouts bar, you just move SL to its uh, open price, or after got follow through, you just move SL to somewhere here or here. Okay, so main idea is to participate in this micro channel. Okay, rather chasing bull move. Okay, that buying move will occur, this faded. Okay, in opening range also our approach is to identify the day where you easily observe is that sellers have dominant role, buyers uh, space for only two candles which are not strengthened. So it is good to assume that this move is not faded by buyers or will not fade. Okay, so this only approach always in a position to sort anywhere any bar here. Okay, after seeing 24th bar, many bears or those who have swelling position can exit or they are exiting here. Okay, if the price traded above here or closing above it, so it's best idea to close exit on selling position. Okay, 25th candle, which is the uh, inside bar in bull channel, micro bull channel. 26 follow through for these three uh, after inside bar, which is buying on close for only for scalp. Okay, we don't know that if this move is going to sustain or not. We are also not getting this size of bar, so it is good to assume that this buying strength is also not good. 27th bar, which is inside bar, so here we see that this micro channel is ended here by this pullback. Okay, these three candles are sidebars. We consider it as sidebars. Also, this move considered as a sidebars. Okay, so if you traded 23rd candle selling on its close, so after seeing these three candles, what you can do is sell again on 27th candle or just wait. Okay, so here you can exit, or if you not exited after seeing this green bar, look, in this 5 candle of bears there is one green bar, two green bar. Okay, and these two candles are not showing strength. So better to uh, get idea that this is the side move. Okay, it created sidebars here. So in sidebars, what happen? Opposite players play for scalp or two-legged move. Okay, after seeing 32 bar, which is not good follow through for 31 candle, 31 bar. So buying on its close, who will buy that? So scalpers or who are buying here after seeing 24, 26, they are in scaling approach, so they will buy here. After seeing 36 bar, which is the good bull bar, which tried to break out above EMA. Okay, it also got follow through of decent bull bar, which is the 37th candle. Okay, now after seeing 38 bar, which is the bear bar, not good follow through for these bull bars or buyers, so they all will exit here. Okay, if not exiting here, so what's their idea? Their idea is to get after first leg some pullback, and then again we tried for second leg. Okay, it's approach for buyers after seeing this decent bull bar, which is breaking above its high. So this is the area where buyers also get in profit. Buyers also have space for two-legged move. Okay, so this is the bear uh, pullback. Okay, which have not good follow through. This is the 38th candle, which is the good bull bear bar, which not got followed through. 40th candle looks like this is the micro channel in this uh, bull move, so it considered as a flag move. We more chances that we again chase for second leg. Okay, so after 42, which is sort of sidebars, 43 sidebars, 44 bull bar, which is the considered here as a exhausted move or ending of pullback, faded by buyers. So 45 candle, which is buying on high, if not exited here or who is entered here on 37th candle, they will again enter it 45 candle, and what they will think is that whenever prices come to our price, we will exit where first position will be in break even, and after second position we are in profit. Okay, so 46 bar, which is the breakout bar to the EMA, uh, second leg starting, so we don't know how much second leg will survive. So it is the buying on close for those who are in this really participated. Okay, sidebars participated for buying trade, they are not on seller side. Okay, after seeing 57th candle, which is the faded by sellers. Okay, so this is the closing on its low, so it is to be faded move, considered as a faded move in this pullback or end of the pullback. So what we can do is, it is the great idea to approach here is that this range will be breakout, or even this low, today's low will be uh, break today. So there are many reasons to trade here. H2, H1 here, H2 here. So H2 sell, moving average breakout sell, fade short. Okay, so this is the first leg of sellers. Now we again chase for bear channel, second leg. So selling on its close is good approach here. Always in sellers will enter more here and move their SL to somewhere here. Okay, 48th candle, which is the good sell on close candle. This is the follow through for 47th candle. These two candles are decent move, which also got followed through by 49 candle, three consecutive bear bar, which is the dominant in this bear channel. Okay. 1450 and 51 candle are considered as a always in short candle. 52 candle, which is short on close. Okay, now this 5 candle or 6 candle consider as a exhausted move. Okay, why? Look, this is the first leg, this is the pullback, which is the 2 leg. So this is the faded by sellers. So let's say these 3 or 4 decent bar, which consider as a exhausted move, there are no more participants here, so there is major price difference is there. Okay, so this is the second low leg, which is entered here and which is faded by buyers. Okay, this is the faded by buyers. 53rd candle, which is the 2 bar reversal candle. So sellers are gonna somewhere exited here after seeing this last candle, which is the last candle, exhausted move ending here. Okay, in if you consider it, this is the 1330 and this is the 1335. So this is the, if you consider 15-minute chart, this is the exhausted candle, which have only 10% of body and 80% of wick, which is the down here. Okay, so whoever trapped here in buying 50s 46 close, if they are able to, or they are in, they can scale in here, or fresh buying position can be created here. I created here buy position, put myself to here. Okay, so this area also gone sideways. I will show idea that why I bought here, or how this structure is to be tradable, what should be your aim to trade. Okay, this two bull bar I traded it for to reach price somewhere here, I will exit here. This is the I consider as the exhausted move. So breakout not gonna sustain, so it will pull back. Okay, so here sidebars are there. Okay, so some in this second leg also there are 2 legs. Okay, so first leg is considered as a 52 low, and So in this second leg there is also two legs. So 52 low is first leg. So after seeing this move, there is the low which is created on 16th low, which is faded by buyers. So this is considered as a second low in this micro channel, in this exhausted move. So buying above that, or if you bought here, moving SL, put your SL here. Okay, you can scale in here if you bought small position here, because if selling channel will further go on, so there are not these side bars are not good approach for sellers. Okay, so this is the exhausted move. After seeing 64th, if you not traded anywhere here for buying position, you can trade here buying on 64, which is followed through by 65 candle, which is the breakout to be EMA. Okay, buying on close 66 candle, which is the sort of inside bar, but always in position is bull side. After seeing this second leg or exhausted move, what buyers will do? Buyers will do for two-legged move. Okay, so this is the bull bar in that two-legged move. Okay, with after spike, this is the 64 and 65 are spike, and this is the micro channel. Okay, so 68, which is the good looking bull bar, 69 candle, which is the reached at the previous candles. Okay, so who's ever bought on 46, again bought on 64, can exit here, or phrase entry above 64 will also exit here, because it is the not good sign for to sustain a up move, because this is the micro channel, spike and micro channel, which is going to, chances are that which is also faded by sellers. Okay, so 69 candle, buyers will exit here. Okay, so buyers have also space for at least more than scalp move. Okay, this is the 32. Okay, this is the 40 rupees move. 70 candle, which is the bear bar. This is the EMA gap short. So price want to stay near EMA. Okay, so these are the sidebars. Okay, so in this type of range day, okay, this is the bear channel where breakout candles, trading candles are more. There are less side candles. So after seeing this 4 to 5 candle, uh, idea is to trade to is for bear channel. Okay, there is no two-sided move. Okay, buyers will not get more than 2 candles. So they are getting here, and this is the pullback which have no strength. Okay, so again go for in short position here. Right approach is for that. Okay, so today's range is all about 159 point. It is the greatest day ever for intraday traders. Okay, even more, actually you can trade, you can get exactly 160 point, even more than that if you traded this selling and this pullback and again sell and also again this. Okay, if you not two-sided approach. Okay, base to get around 150 point is easy to structure like this, where trend bar is more and less sidebars. So no two-sided move, it is one-sided move. Okay, so okay, let's go for our uh, one way of trade all day structure, and then we go for how we can unfold the today's chart. Okay, so some other structures are also there, we will explain that. Okay, let's go here. Okay, so in this uh, topic we are going for every day, we are approaching for wage and midday approach. These two are two methods we taking trades. Okay, let I will show you example. This is the considered as a wedge pattern. Okay, so we are trading it here, and midday approach where 60 to 70% are day, where price come to midpoint of the day. Okay, so we are also trading that. So today is the uh, trend bar, trendy day for bear side. So here no wedge pattern look uh, easily can be watched in 5 minutes. Okay, so this is the buying, we consider it as a expanding wedge. Okay, which not able to get up to this point, even not able to sustain moving average. There is, it is too interesting to notice that there is no single candle which is closing or get followed through bull bar. Okay, so this is also faded. So no wedge seems. In midday approach, we are approaching that price will uh, stay or come to midpoint, and then after we trade it for two-legged move any side. Okay, so if we consider it here, there is no here no midpoint or mid price point in this range. Okay, but how, why do we consider? Because this is the bull bar, which is the breakout bar. So if you look, we have a many trade discussion that this is the right approach. H2 EMA gap, this is the EMA gap, this is the one, and this is the two. This is the same setup traded today. This is the Friday chart. Looks like Friday chart. Okay, previous day. Okay, so this is the faded move, and this is the EMA breakout, uh, which can be traded here. Okay, so same pattern happen here. So today midday approach is to be easily tradable move. If you not participate in this move, or if you participate in reverse move chasing, okay, so this is the best approach to trade here. Okay, okay, let's go for other chart structures. Okay, let me copy chart. After saying this up to this level, okay, this is the same moving average. Yeah, so after seeing this level, this is the same structure. Look at this. um, Breakout to the EMA, retesting, EMA gap is maintained. Buyers will get space for first leg, second leg. After second leg, there is exhausted move. There is big selling bars. This selling pressure is faded. So here, after sidebars, this is the faded by buyers. Okay, so this is also one of the structure. So okay, this is also a good structure where price stayed at moving average and then it gave breakout. So buyers also have first leg and two leg. This is the early pullback type day. Okay, so this is also pullback or buyer space for breakout above moving average, which is the same if you consider it. Okay, so this is the breakout bar moving average, and it got occurred in channel. Okay, two consecutive bar and channel, spike and channel. So this is the spike and channel. Okay, what, after seeing this wall pattern, what you have to do is you can do it, master it there. How master is, if you are seeing this type of patterns, okay, so you have to trade anyway, or you master it, or you construct the strategy to trade it. You assume that there is the 1 2 and 3 consecutive, consider as a three consecutive buying bar. Okay, 1 2 3 three consecutive buying bar, it is the spike, EMA above. Okay, so two rules are there. After these two EMA, there is not more green bar or equal size bar. Okay, so the equal size bar, and there are 1 to 2 bear bar which not got followed through. Even buyers buying channel not got followed through. So all the rules are setting here. So by taking trade below any bull bar, okay, so this is the bull bar, below bull bar, taking the trade, it makes sense. This structure is tradable. Okay, here we got the decent bear move, here we got the one move, and because it is the uh, last 15-20 minutes, okay, so it is the right approach to trade here. This is the first leg, second leg move. So it is the great decision to make that we will not go for further high, or this move is not faded. We say this decent red bar. Okay, so these are the good way to trade. Okay, this is also best example. Moving average gap is maintained. This is the micro channel. Okay, now buyers will, after the 3 consecutive bar, so it is not strength. Okay, they have no strength. After seeing this bar, it is the side moves. So they got first leg here and they got second leg here. After seeing this gap, EMA gap, midpoint, okay, breakout to the EMA. So this is the good selling pressure. So after this 3 candle, this is the considered as an exhausted move in selling pressure. So after these sidebars, buying above it, buying above it, buying above even breakout. Okay, this is the also measured move where 0 is here, 50% and 1 is here. So buyers got decent space in here after this selling pressure at starting. Okay, and these are all the selling channels. Okay, so great moving average gap is maintained. Buyers will trade it for 2 moving average. This is the exhausted candle. If you not trade it after this candle, not sure, you trade it after moving average breakout. Look, I have shown more than 5 or 6 examples that you can trade it moving average breakout candle. Okay, so this is the trade to be entered here. This is the trade to be entered here. Move your SL here. After seeing this candle, you just scaling. Okay, if you not want to scaling, stay in position. This is the micro channel, spike micro channel, which have consecutive to green bull bar and as well decent bear bar, which are more in size. Okay, these 2 bull bar, again we got. Okay, so this is the considered as a exhausted move because they have no strength. Okay, sellers have no strength. So this is also a good looking chart for bear day. At the end, you said that buyers got in. Look, breakout to the EMA, breakout to the EMA, and they got first leg, or they even got scalping like position. Okay, here also that first leg. Okay, this is the bear channel. Okay, so after these sidebars, there is no strength in, even if you look here that this is the 2 bull bar which have decent size, this bull bar, this bull bar, this bull bar. So more chances that if you got consecutive bull bars, then there is chances of 2-legged move. Okay, so this is the breakout to the moving average. If you not got any idea here, so just what you do, uh, if you kindly observe it here, that what is gonna more dominant, above moving average or below moving average. Okay, and who is dominant? Let's say above moving average, there are more buying candles are there. Okay, so these 2 are bear bar which is faded by buyer. So here buying position can be easily created. Okay, if you not able to read it, if you not participated in it, it is the right approach to trade here. Okay, so price not moving below it. If moving, then it is not sustaining by sellers. There are bull candle below moving average. So more chances that it got followed through. Okay, so here micro channel is there. So first leg and this is the second leg. So where all the position is exited here or below here. Okay, so it is the also same good structure for bear channel. And end of the day there is small here good decent swing trade for bears and buyers as well. Okay, so in today's structure as well, uh, easily get 150 point move if you trade well, if you got idea, or if you traded like always in position. Okay, so easy day, bear day. Okay, uh, okay, thank you.